Hi everyone, welcome to the channel. Welcome to Bolt Invest. My name is Savitar. I'm one of the co-founders here in a community that focuses on working towards your financial independence. Typically, we focus mostly on stocks and options. And TL39, my other co-founder, does an excellent job reviewing and looking at stocks in play, carrying lots of momentum. You can see some of his videos in our channel. We recently reviewed GameStop, which went to the moon, as well as Palantir and a few other ones. So definitely go check it out if you want to learn more about our thoughts and where we think certain stocks are going. This is our first video in cryptocurrency, specifically on Bitcoin. I myself have been heavily invested in the cryptocurrency space, so I wanted to do this quick video just to kind of talk about where Bitcoin's going. I've been in since 2017. I've mined Ethereum. Since then, I'm still mining it today. And I lived through the boom of 2018 as well as all through crypto winter in 19 and 20. So been around for a while. I understand how the markets work. So let's dive right into it and let's look at what Bitcoin is doing today. So without question, I think, November, we hit 18,000, 19,000 here. And we're like, this is amazing. It's hitting all-time highs. And then it just sits there for an entire month until it really takes off. So literally in that time, we get a doubling effect here. And so anyone going in and you're FOMOing and you're wondering, oh, when I have to get in and I'm going to ride it to the top. But then as it goes up every day, you're wondering, when are we going to have a big pullback? And finally, in that second week of January, once everyone's back to work, there's a big retracement here. So I want to talk about now, what do we do? And, is there more upside, or, it's sitting here. Should I be expecting this to come back down? So on the daily, it's pretty difficult to see. There's not a lot of data. And since I'm taking a longer term approach to this, I'm going to use the 4-hour bar. I like using 4-hour. TL39 has also used the 3-hour chart, but let's use the 4 hours so we can get a bit more data and see where we're at. So first thing, if you're not used to charting, if you're not used to looking at, bar charts and, just getting into the space, you bought some crypto, now what do you do with it? First thing that kind of jumps out to me is these bottoms here. And it always likes to hang around a nice round number. So let's just use 30,000 as that number. So I'm going to draw a horizontal line there. Close enough. And what else do we see in this chart? I see a descending slope. So let's draw that as well. Now, one thing I also want to say, if you're learning about technical analysis and you've been watching all these different videos, the fact of the matter is you can draw lines to whatever shape and size that you want until it justifies your thesis. So that I believe that's absolutely true. But the reason why we do technical analysis to begin with is because you are still trying to find the pattern with the highest probability, so that when you eventually enter into a transaction or a trade, you're hopefully getting it at the price that you feel most comfortable with, and that it's going to go the direction that you want it to go. So in this case, I like, support lines, obviously. I like playing trades on reversals. So playing, moves like this. If it dips below 30 and it gets bought back up right away, I like to play it there and go for a ride. So if this is the other trend that I'm seeing, is look at that. Hits all of those peaks right from the top. So it's following this trend line quite nicely. And so what this ends up doing is it's starting to show a wedge. And as it gets tighter and tighter and tighter, something's going to happen. It is either going to shoot up like that, or it's going to completely break support and go straight down. At this point, we have no idea, and we can only make our best guess. So looking at this right now, I just want to talk about, why we are here and why the chart looks the way it looks. So the other indicator I like to use is RSI, which is Relative Strength Index. And with TradingView here, they show a pretty good, they have everything default and it's already set up so that anything that's over an RSI level of 70 is typically overbought. Anything below 30 here is typically oversold. So when something is overbought, that means there has been so much buying and it's so hot and heavy that at some point, we're going to expect a reversal, which is what we saw in the second week of January. And one of the things you can see here, so in December, it's running. RSI is peaking here, 85, comes back down, rests for a bit, goes for another run up here. But this is called a divergence. This is where even though we get a higher high, the RSI, the overbought conditions is slowly diminishing, meaning that the momentum and the buying that led to this run was not as strong as this run and rally over here. So that should give you a signal that, I think there might be a pullback coming. But there's 1, 2, 3, 4, 5, 6, 7, almost 10 4-hour bar charts. So that's probably, 3 or 4 days since this trade's 24 hours. And then sure enough, we get the full drop off. Now, a couple things to note. A lot of different things have happened during the time, and it's not all, FUD related. FUD being fear, uncertainty, and doubt. I don't believe that for a second, because there are articles that are out there explaining how there are more number of whale wallets, so that are wallets with more than 1,000 Bitcoins, than there ever have been. So whoever has deep pockets and all these institutions and hedge funds who have money, they are holding it. So this is unlike the time in 2018 when, retail investors were pumping it like crazy, and there wasn't a lot of institutional support back then because everyone was just warming up to the fact of, what is Bitcoin and, what is this cryptocurrency? Whereas now you have a lot of institutional support. And so among other things, one of the comments that I read was not just weak hands and retail trading. It was also leveraged positions who were responsible for the sell-off as well. And something to, I started trying futures trading as well on Bybit. So if you take a look at Bybit here, pretty interesting. You can learn about how futures contracts works, but you can use 50 times to 100 times leverage, which is quite amazing and also very dangerous as well if you're trying to trade that. So if you go 50 times on a position and you catch it here and you ride it up, you make a killing. But at the same time, the moment it moves a little bit down, you could liquidate your entire account because you're using 50 times the amount of buying power than the actual equity you have staked or like as collateral. So if you have 1 Bitcoin and you're using 50 times leverage, you're buying 50 Bitcoins and you're riding that wave up. But at the same time, if it goes the other way and it comes down, then you only need to lose a small percentage of the price to lose the 1 Bitcoin you're holding as collateral. So that's what I read is what happened here. The other thing that happens in leverage trading, and this is actually more common in the Forex market, is called stop loss hunting. So stop hunting is essentially institutions and market makers, they can see your stop loss orders on the exchange, and they will purposely short down until it triggers an effect. Whereas, maybe it's algo trading, maybe it's other things, but they'll blow through all your stops, force you to exit your positions, and then take, that position from you. And that typically happens, and it's different than in the stock market, because in Forex, you can also use 100 to 1, 200 to 1 leverage. And same right now is what I found in futures trading. In the Bitcoin and Ethereum world, you can use 20, 30, 50, 100 times leverage. So you naturally have to put stops. Otherwise, you could wake up the next day and have your entire account liquidated and margin called, as it's usually coined. So that's one of the reasons here. And a few other things happened this week as well, because look at this, it's really, really choppy. And there was another down move here after we double bottom here. I honestly thought we were going to continue going straight up, when it hit 40,000. But another good point to mention, I've actually been waiting for this point. I actually bought some Bitcoin in around the 31.5 level here. And I actually waited from not this drop. Part of me was FOMOing when it came back up, and I'm like, oh, I missed this move. But I was actually expecting longer term weakness, and that I would be able to get in at a lower price. And that is because this high hit 40, but it didn't break the last all-time high of 41,000. In addition, again, like I said before, the divergence on the RSI is actually a big indicator as well. So this ramp up here, this buying power, this buy rally up here, the RSI did not even show that it was overbought. And if you look at the volumes here, the volume bars, when we were buying up here, huge volumes. When we're buying up on this one, not so much. So again, more indicators that this is weak buying pressure, and I would expect a pullback. And sure enough, we got a pullback here. A couple other things happened. There was the Bitcoin double spend, and I'm not going to go into that here today. You can look into that. But on January 21st, let's see what happened. So 4 p.m. Eastern, in around here. So right here. So when that happened, boom, we've been holding this $35,000 level this whole time, and then boom, we're down and we're down. And so let's just see from that point, we moved down almost 20%. So that's a 20% move from that one article, which eventually got corrected. And so you're probably thinking, okay, for me, if I were you, it's sitting at this 32.5 level, and it's kind of no man's land. And so one of the things you have to be thinking about is, okay, do I buy here and gamble that it goes up? Or do I wait and wait for the test of 30,000 and try it there? In my opinion, I think a fourth bottom at 30,000 is probably a safe level to enter. So I would wait until it comes. Now, it may not come down to 30,000. So like this came very close. I think this one actually touched, but this is pretty close, like 30,500, 30,250. Around that level, you might not get your perfect entry at 30,000. So at 30,250, I just pull the trigger and try it there. There is still a risk that if it breaks down 30,000, it can go quickly. So it's your call. You can run a stop, but a lot of times it breaks down and gets bought back up really quickly. Breaks down, gets bought back up really quickly. And this one here had a lot of buying volume. So when it broke 30 there, it got bought back up right away. And so when I look at this, and actually last night, before I went to sleep, it started to ramp up. And I actually thought this was a bullish signal. So if I looked at, parallel channel, so like from here, not a perfect, okay, there we go. So you can make an argument right now that, yes, we are in a wedge. And if you are in the camp that I think it's going to break this wedge and go up, then this is the channel that I'm looking at. And if I look at it from a, let's say a 5-minute chart, or if I look at it from a 5-minute chart, it is almost perfectly sitting in this channel. Look at that. 1, 2, 3, touching the bottom again and potentially going up. And as you can see, it's slowly getting there. And once we break past this yellow, we could get a lot of volume to the upside. So that is the potential play here. And I'm just going to remove this channel for a second. And I want to talk about briefly, where could we be headed? So going back to what we were talking about before. In November, October and November and December, we were sitting here at 20,000 for over a month. And so if I draw a Fibonacci extension from this point all the way to the top of the move, and then all the way down to that nice 30,000 level, where are we headed? So just want to show you there. That's 1.61. That's 61% extension, which is often called the golden pocket, is at the $65,000 level. Now, if we were to match this up with the actual lower bar there, it's all around that same area. So I think if we're talking about where we think Bitcoin is going, and if it survives this bounce off 30,000 and it breaks past this wedge, then my target is somewhere between 60 and 65. So that is almost a 50% gain within this time period. So I do think Feb, March, April, I think that is reasonable in the first half of the year. Hitting 60,000. We have enough bull theories to support that. Another one that I want to show you, this was recently announced, and also part of the reason why I drew the channel initially. This move last night was a combination of a few things. So one is MicroStrategy. But they announced this 7 hours ago, Bitcoin for corporations. So we know that MicroStrategy has the legal team, the finance team, and all of the professionals working behind the scenes on how to acquire Bitcoin for the corporation. They are now rolling that out to other hedge funds and corporations and people who are interested in doing a similar thing. So that is all bullish momentum for more institutions to acquire Bitcoin. So again, I think as this year goes on, I think the adoption of Bitcoin will drive the price to $60,000. And by the end of the year, we could be headed to $100,000. And if you think that is crazy, that's completely fair, because I mean, you know, when I got into this in the beginning and it ran to 20,000 and then it subsequently dropped to 10 to 6 and then to 3.5, I was also like, oh man, like, where are we going with this? You know, like, is this actually worth anything? Should I keep buying into it? But I think the thing that's different now is all the institutional appreciation and all the big funds that are coming in to purchase and hold Bitcoin. So if we go back to the chart here, you know, do I think it's possible to hit 100,000? You know, when you look at it like this, it looks like this is the consolidation phase again. And then if we break out, we could be headed up there. A couple of things I also want to talk about. You know, you keep hearing about, you know, gold as the original, like, inflation hedge, interest hedge, all of that. And gold is valued at 10.6 trillion. And we're looking right now at Bitcoin market cap, and it's at 600 billion. So let's do some quick math on that. 10.6 divided by 0.6. We're looking at 17.6 times. Bitcoin's currently trading at 32,500. So if you take the thesis that at some point Bitcoin is going to replace gold as the de facto inflation hedge tool, then is it possible that we can go from 600 billion to eclipse gold's market cap at 10.6 trillion? If that's the case, then that means one Bitcoin would be worth 574,000. And those are numbers that have been thrown out from Catherine Wood and from other prominent figures in the industry, whether it's between 200,000 to 500,000 in Bitcoin. Will that happen next year? Probably not, but it will happen over time. And another thing to consider is that there's only 21 million Bitcoins that will ever be produced. And so that scarcity also drives it up. So things to keep in mind when you're thinking about the bull case, but really today, focusing on technical analysis, hoping this helps you read a chart. I know I talked a long time about other things, but just wanted to hopefully add some context and some color on, why the chart or why the stock, why Bitcoin moves the way it moves, and what's the fundamentals that sits behind, these bars. Because, like I said before, I like technical analysis too, and it's supposed to be a way to give you a better entry, a more predictive and more probable entry. But at the same time, and I'm sure you've seen many YouTubes, you can draw lines until it suits your thesis. But at the end of the day, I want to marry both. I want to have technical analysis with fundamentals and why I'm entering in and what the bull case is if I expect this to increase and continue going up. So thank you for joining. Hope this has been helpful. And please like and subscribe.